Hi, everybody. Welcome to FREDLA's series titled The Business of Family-Run Organizations. We welcome executive directors, office managers, program directors, and perhaps some board members who may have joined us today. We invite you to introduce yourselves in the chat box and to tell us your role in the organization and where you're from. We also invite you to use the chat box to ask any questions throughout the presentation. We'll be sure to get to them in the course of the webinar. This is the third of a series of 4-part webinars over the next month on the topics focused of business operations of family-run organizations. As family-run organizations, we must operate as businesses, but often our passion for our work takes precedence over business operations. So FREDLA has been offering this series focused on topics related to running small businesses. This is the team for the Family Run Executive Director Leadership Institute, and my name is Jane Walker. I'm Senior Consultant here, and we are a partner with the University of Maryland in the National Technical Assistance Network, coordinated through the University of Maryland, and we are very grateful to the network for hosting this webinar, and to Sarah Warner, who is part of the tech team at the university that works the magic to get us all connected across the country. A little bit about FREDLA, in case you're new to who we are. We were started in 2013 by 16 executive directors of family-run organizations, all of whom are caring for children or young adults with mental health or behavioral health needs. Our mission is to build leadership and organizational capacity of family-run organizations, promote their value, and influence policy for our children and families. FREDLA collaborates with both state and national organizations and offers technical assistance to family-run organizations, states, and other stakeholders. So our topic today is insurance. Some would say not a very sexy topic, but if you're running an organization, you know it's a topic that is very, very important. There are several myths about insurance. One, if you have insurance, you can't be sued. Or nonprofits are immune from lawsuits because they are charities. Or the only insurance nonprofits really need is D&O insurance, or directors and officers. And if you've got that, it protects the nonprofit from any liability, including employee-related lawsuits. Of course, all of these myths are false, as nonprofits are not immune from lawsuits. So there's many reasons why family-run organizations need insurance. Obvious ones are somebody gets hurt, injury, car accident, somebody falls on the property, or in the course of doing their work. Contractual disputes, you say you own a piece of work that you have developed, a curriculum, whatever, and somebody else says, no, you don't. We paid for it, you don't own it. There's many instances of where disputes have happened about this. Rob will tell you, however, that you really need to read the fine print in your insurance policy for any details about contract disputes, because some may not be covered, but it is an issue. Employment is probably one of the biggest. Suits around sexual harassment, wrongful termination, discrimination, wage and hour disputes. And then, unfortunately, we all work for nonprofits, work with our hearts, and don't want to believe that any of our employees would be dishonest. Unfortunately, that is not the case. We've seen examples of that around the country. So it's these reasons that prompted FREDLA to really invite our presenter, Rob Cannon, who is Executive Vice President at Gorgas & Company, and one of the owners, I might add, for 37 years. Rob has worked with the Maryland Association of Nonprofit Organizations for Insurance and Employee Benefits for 25 years, as well as the Delaware Alliance for Nonprofit Advancement. So Rob brings a wealth of experience and particularly a dedication to the nonprofit world in helping nonprofit organizations ensure that they are covered as in all areas needed and as much as they need. So with that, it's my pleasure to introduce Rob Cannon.
Thanks, Jane. Can you hear me?
Yep.
Okay, great. That was a very nice introduction. So the first policy that a nonprofit organization typically provides is directors and officers liability. I'm not going to read everything on here, but as Jane indicated, there's some myths about immunity, and people think we're an organization that's incorporated and we're nonprofit. I haven't seen any charitable immunity laws that are good enough to eliminate the need for insurance, and neither have my association partners and their attorneys. So what you're supposed to do as a board of directors or an executive director is to deliver the mission, the reason the organization started, that is consistent with the Articles of Incorporation, bylaws, and tax-exempt status. So you're supposed to do the right thing. If you don't do that, someone may bring suit either from within or outside the organization. Employment practices is included in any good nonprofit directors and officers liability policy. And some people get hung up on employment because they don't have any employees. Well, if you buy a good policy, there are three groups of people that it will address. The first is employees for wrongful termination, discrimination, etc. The second is volunteers. You have somebody that wants to be on the board. You have somebody that wants to be the president of the board, somebody that wants to stay on the board, and a decision is made that they don't appreciate. So you could have a volunteer say, you didn't let me be the president because I am, and fill in the blank. Anything you can think of. That's the second group. The third group is third parties. So you're delivering services to other folks, and you don't have the ability to serve all the people that would like to benefit from your services. And someone says, you picked him over me because of whatever. The fact is, you just can't handle it because you don't have enough people, enough funds, etc. So you can have employees, volunteers, or third parties. So Jane, were you going to?
Yeah, Rob, I was going to mention that according to the Nonprofit Insurance Alliance Group, in any given year, 1 in 25 nonprofits will have a D&O claim against them, and nearly all of them are employee related. It also said the average cost of such a claim to resolve is around $35,000 for an organization. So that those dollars in themselves mean a D&O policy would be well worth the investment there. So other examples in the Harvard Business Review show the prevalence of, and one of the issues is even board member misconduct. And the Harvard Business Review did a survey of media reports showing the prevalence of board of director misconduct and found that 34% involved lying to the board over personal matters. They use example of criminal records or drunk driving offenses. 21% affairs or relations with a subordinate. I had a call not too long ago from a family-run organization about that very issue, something that we think doesn't come up often in a family-run organization, but it does. 16% involved the CEO, the executive director, misusing corporate funds. We know of several instances as well in the family organization network where that has been the case, resulting in criminal misconduct. 16% involved objectionable personal behavior, using the abusive language with employees, clients, whatever. And I thought this was interesting. 13% involved making public statements that were offensive to customers, clients, or social groups. So the CEO speaking in a public forum and saying something that was, all of which could in some way result in some kind of a lawsuit. So there's many examples out there of things such as this, again, reinforcing the need for D&O insurance. Okay, Rob.
Okay, the next type of coverage that many organizations want to get is general liability. This is coverage for bodily injury and property damage to other people, not employees, not volunteers. So it can be written as an annual policy covering, your typical services. It can include some types of events if the underwriter is made aware of that. And some people don't want an annual policy. They just want something for their annual fundraiser. So general liability can be written in one of those two ways.
Mm-hmm. So, Rob, you mentioned events. So would you say that an organization that may have a big event, let's say a summer camp for children, would you then say they would need to get additional coverage for an event they might have?
So if it's a golf outing, if it's a gala, an all adult event, then general liability may be enough, unless there's liquor involved. If there's liquor, there are questions about who's providing. Are they paying for it? Is it catered? Is it in a facility? So depending upon the way it's provided, that business is in the business of, and they should have it, for their business. And if they do, you want to be listed as an additional insured for the event, so that you share in their liability coverage, which they already paid for. If a camp involving children or folks that are vulnerable, either because they're old, developmentally disabled, or something else, it may get a little messier because there may be concern about allegations of abuse or molestation. So when you're dealing with a vulnerable population, in a general liability package, there are often a number of different types of coverage, and some have 4, and we're going to touch on some of the other ones in a little bit. But I try to encourage people to let us know if they're having any events, and whether it's at renewal time or later in the year. If they start planning something, it's good to just say, hey, we're thinking about doing this. Do we need to worry about insurance? Are we okay?
I can give you an example that I thought in a flash my entire career was over. We had a training in a small town and in their town hall. And the children were there with their families, and one of the children knocked over the town's mural that they had specifically had commissioned for this town. And I received a call on Monday that we were going to be held liable for this this mural. And I just truly thought this is the end of it all, that our entire organization, which was not that large, was going to be in debt to this small town forever. It turned out not to be the case, but I think that's a situation where, again, general liability is, you just never know when it's going to come in handy. So that sure was one of those instances for us.
One last thing on general liability. In some policies, there will be an endorsement that's designated premises. If you ever see an endorsement that says designated premises, be careful, because that usually means it's the address that's listed on the policy. So your space, that's rented or something like that, and then the minute you leave those four walls, you may have no coverage anymore. So it's very important if you see that, or even if you know to look for it. If it's there, be very aware.
Okay.
Okay, professional liability is very important for a lot of nonprofits. People think of it with doctors, lawyers, etc. But if you're doing case management, information, referrals, education, all of these types of organizations could have allegations by somebody who felt you weren't qualified. You operate a hotline or a warm line, and the way you treated, my daughter upset her to the point where she committed suicide. So there can be things that seem extreme, but a lot of organizations should consider professional liability. And you don't have to have a license, you don't have to have passed the bar or anything like that. You can just be answering the phone, trying to provide information about autism or whatever else it is, and you may have exposure there. So it's really errors or omissions. So you make a mistake or you fail to do something that you should have done that you would have been expected to do by a prudent person.
A lot of our government contracts
Workers' compensation. So this is required in the state of Maryland if there is an employer-employee relationship. So it can be you've got one part-time employee working 5 hours a week, and that triggers coverage required by the Workers' Compensation Commission. It's going to pay for compensable injuries in the course of employment. So it can be the medical, it can be wages, you can't work and get paid, it could be rehabilitation, or it could be a total. It could be a total temporary or a total forever, because you can never work again. So there are some fairly big claims by workers' compensation. Workers' compensation is not intended to cover independent contractors. A lot of organizations deal with independent contractors. That opens up a can of worms because you got to be really careful about somebody that's classified as an independent contractor, and they may or may not be. If they truly are, it's not going to cover them. It's not going to cover your volunteers. So if a volunteer gets injured, there's no coverage under workers' compensation. It is intended to be for W-2 employees. Fidelity bond, Jane touched on. This is sometimes called crime, sometimes called employee dishonesty. It can be that there's misappropriation of funds. They could steal inventory. They can be diverting checks to friends of theirs or something like that. So if it is done by an employee, then employee dishonesty should provide coverage for you. There are other types of coverage under a crime policy, like forgery. So if the employee does it, employee dishonesty is fine. If a third party does it, that's forgery. They sign my name on a company check, but it's not me. So if you're ever looking at coverage, be careful, because there are a lot of different coverage parts, and you might not be sufficiently covered with just one. Okay, hired and non-owned automobile liability. A lot of people don't think auto is important because we don't own any automobiles. However, if you don't own any automobiles, everyone's driving their own automobile. So it is a non-owned auto to the organization. You're driving to a board meeting, you're driving to the bank, you're driving to talk to a funder, whatever it is. All of a sudden you get in an accident. In the conversation, they learn you were driving for agency business. The suit now names you individually and the organization. Well, non-owned auto will provide liability coverage for the organization if they are named. You need to have insurance on your own vehicle, both liability and proper physical damage, if you want that coverage. The non-owned auto liability will do nothing for the individual who's driving his or her own car. It's only for the organization.
So, Rob, you would also recommend, going back to the higher non-owned automobile, that employers require employees to provide proof of their own auto insurance?
That's a very good idea. While I'd love to say that that's going to really make a difference, I could provide proof of coverage today and I could cancel tomorrow. Either intentionally, accidentally, I didn't pay my premium. So the difficult thing is to really be assured that somebody is currently insured. I don't know how to do that. But if that individual is driving an uninsured vehicle, he or she's probably going to run into a problem with motor vehicles at some point if it's ever discovered. And that can be very, very messy. But as an organization, you can only insure what's yours. So you can insure your employees' vehicles. So you're not entitled to be able to provide coverage for anything that you don't either own, have a financial or a legal responsibility to insure.
But however, could it be construed that the organization was not doing due diligence if they didn't require proof of employees' automobile insurance if part of their job was going out to meet with families?
Absolutely. You know, attorneys are going to try to, build a stronger case. When you file a suit, you want to win. So if I'm the attorney, yes, I'm going to try to make everybody look like they should have done a better job. And requiring the proof is a great idea. Asking for updates, every 6 months or 12 months is a good idea. Some organizations will ask some employees, some volunteer to provide the motor vehicle record to show if they have a valid license, if they have moving violations, or if they have accidents. All of those are good things. Now, in the good old days, we used to be able to get motor vehicle records for our clients who asked, and we could share that. Well, these days, with the privacy concerns and all the HIPAA concerns, we're not even allowed to do that. If I said to you, so-and-so is not permitted to drive under the insurance company policy, and you said why, I wouldn't tell you the reason. I would tell you that the insurance company has indicated that he or she is excluded from coverage. And if you want to know why, you'll have to deal with the individual. But yeah, any of those measures that you take are great. Some people, when they're presented with that, they say, well, I don't want to discourage these people because they're volunteers and it's an important part of our program. So sometimes they walk on eggshells because they don't want to make people feel uncomfortable, like maybe they suspect something. It's people that have a clean record aren't going to care, probably. If somebody's got something to hide, they might turn and walk away.
Well, and you raise a very good point that we've had this with employees because many of our employees do have prior histories, and we don't want to penalize them for that if they're, shall we say, back on track, and they can actually be very valuable in the work that they do, having had that experience. So, yeah, it's something that boards, I think, need to seriously consider in their policies around this. Very good point. Thanks, Rob.
Okay, so there are a couple of different types of policies. Most people are familiar with occurrence policies because that's what most policies are. So if you have a policy that's from January 1 to December 31, 2020, and there's a claim that is brought during this year or next year, but it says this happened on November the 30th, 2020, but the suit comes in March the 25th of 2021. If that is a covered peril and it occurred during the policy period, it's going to be covered even if it's reported late. Claims made is very different. Claims made means if it's a covered peril and the claim is made during the policy period, so now the claim needs to be made in 2020, and they usually give you a month or two after that. But if you have a policy this year, you don't renew your policy, a claim comes in March 1, 2021, alleging that it happened in 2020, you got no coverage. Once you run out of that window, like 60 days, your coverage is gone forever. So claims made policies are typically issued for professional liability, directors and officers liability, and sometimes other. If you have a claims made policy and you don't renew because you don't have any money, you're going to dissolve, you're merging, something else, many times it will be recommended that you get an extended reporting period, which is sometimes called a tail. So after that year, you buy a one-year tail. So you have 1 year in which to report a claim that occurred while the policy was in force. So it's some people don't like the fact that you pay and then you feel like you're paying again. But if a claims made policy is the only policy form that's available, then you just need to be aware how it works and what you can do to try to protect yourself. Sometimes people want a 5-year tail or a lifetime. Claims typically don't get reported that long after unless it was something like, we think that this brain injury may have occurred during childbirth. And that person has the right, at age 18 even, or to bring a suit. So there are a few types of things that really have a long tail, but most of the types of coverage we're talking about will not.
So, Rob, could organizations request one or the other, or does the insurer make that offer, shall we say, of we're offering you claims made, or what? How does that work?
Usually it is the insurance company that provides the offer. So it's rare that an insured has a choice between the two.
Okay.
What's a little bit more common is you might find a certain type of coverage that company A writes claims made and company B writes occurrence. But
okay.
within a given company, it is very, very rare to have that option.
Okay. So you bring up a very good point about shopping for insurance. And I know you and I have worked together for many years in various.
Jane, I'm not able to hear what you just said.
Whoops. Okay. Can others hear me?
Jane, you're coming in clear for me.
Okay. I'll try again, Rob.
Okay, thank you.
How would you shop for insurance? If you're the executive director, how would you shop for insurance? Did you hear that, Rob?
Well, I think yes, how would you shop for insurance if you're the executive director? So I think the good thing would be to be aware of these types of issues, and when there are quotes that are presented, ask the broker specifically to identify what type of policy is being offered for each type of coverage. And if they're all occurrence, you might feel like that's awesome. If they're all occurrence except the D&O, maybe you say, is an occurrence available? Some people would say, which is better?
Mm-hmm.
And it depends who you ask, and here's why. If you have occurrence from day one and you have occurrence continually, that's a good thing. You have no gaps in coverage. How many organizations have started to operate without insurance? We're new. We're putting the board together. We're trying to get funding. You know, we haven't started our direct service delivery. Now, 6 months later, 6 years later, we get our first insurance policy. Well, I might say claims made is better. If there's no retroactive date, which is a start date, because if there's no retro date, what that means is everything you did in the past is going to be covered if the claim is made while the policy is in force. So it's a way to help kind of cover your past, and it may be that that's all that's available anyway, but on the claims made, it can be good, it can be going back to the beginning of time, or it can be with a start date, a retro date of when the policy is written. So it's important to know which type you have if you're not doing it from day one. And how many people really do it from day one? So I've had organizations say, well, we've been around for 5 years, you know, for whatever, and never had a policy.
So you and I have worked together for many years in different organizations, and the way I found you was through the Maryland Association of Nonprofits. And I believe other states have similar associations for nonprofit organizations. So that might be a good place to start to find a broker that specifically works in the nonprofit arena, would you say?
Yes. I don't think any state nonprofit association or even a national nonprofit association is going to be comfortable endorsing, recommending somebody that they're not familiar with, that they don't feel brings more value, you know, to the membership. And, you know, you don't get an endorsement like we have, you know, without sort of proving yourself and also proving that you truly are trying to help, you know, the members, and it's a win-win-win situation. You know, the members benefit by having a resource that is familiar, you know, with the sector, that has relationships with companies that are very receptive. And I'll be honest, when nonprofit organizations are asking the association for a recommendation, it's usually because they don't have a broker, they've never bought insurance before, they're new, they're small, other people might not want to bother with them, so or they are very unhappy, you know, with their current relationship, and they're trying to figure out, who do I call now? So if somebody does have the fortune of the endorsement of a nonprofit association, it probably means that the person has proven some ability which the association believes warrants them recommending that. Now, I've seen situations where people try to buy the endorsement, so I don't think that that's the best strategy for an association to endorse, but you know, it happens. So for the most part, yes, I think a nonprofit association endorsed broker is probably a good place to go, either as your first call or as your second call.
Yeah. Yeah, we had somebody before finding you, and it was through the Maryland Association that we did, and that was very beneficial. One benefit that I have had from working with a broker over the years is that you have helped us to summarize all of our policies. It began to become overwhelming that we had this professional liability, this general liability, the D&O. Did we need, you know, other kinds of, and so one thing that was very helpful was providing a summary of all of the types of insurance, the coverage, the dates of coverage. So if organizations on the call don't have that, it's an extremely helpful tool, and it's one I think that you can easily share with your board members, and the broker can help you pull that together as someone on your staff did, Rob, for FREDLA, and to show people what coverage you have, how much is covered, and all the details of that. So I would recommend anybody who's working with a broker to ask for that summary, or for to develop a summary of their insurance coverage. It helps to track it all. It comes in the renewals come in at different times of the year, and you're wondering, oh my gosh. I think another thing I have found that I think, Rob, you or one of your staff had, I was getting renewals from an insurance company. I'm like, I don't even think we have a policy with this insurance company. And it turned out that they were bought up by somebody else. And so whoever was holding our insurance last year was now operating under a different name. So just tracking all of that has been enormously helpful. And I know that you or someone on your staff said that there's a lot of that merging or buying of different insurance companies at this time.
So let me just add something that we didn't put on the slides. And this has happened a number of times recently. We write a director's and officer's liability policy for somebody, or we write something else, and then somebody else writes another policy, and all of a sudden you're dealing with a couple of different brokers. I had somebody, a month or two ago say, can I just do all my stuff because I have stuff with another broker? And I said, absolutely. And what we found is we had some coverage, the other broker had the exact same coverage. So they were double paying for insurance. And when I pointed that out, she said, well, I want you to take all of it. I don't want any duplications. And I also want you to tell me what gaps you think I have. So I said yesterday to somebody, you should deal with one broker. I hope it's me. But if it's not me, it should be somebody else, because one person should be working with you to help you understand what you have, what you don't, and point that out. I mean, I pointed out yesterday to a client, you don't have employment practices and you don't have cyber liability. You should have both. If you don't, I'm going to be okay with that because I told you that you should, and your broker should be looking out for you. And it's not because if I sell another $1,000 policy, it's going to change my standard of living. It's because, and we'll get to it in a minute, but cyber liability is a growing concern, and most people have never even had an offer for a policy.
Mm-hmm. Yeah, very good. Here, back up, or go ahead, I guess. There we go. Big topic.
COVID-19?
Yeah, big topic. Go ahead.
Lots of people like to talk about this, and we can't go more than a few days without reading. They're trying to get the insurance companies to pay claims for COVID-19 or for business interruption or whatever it is. My opinion is that most existing policies did not contemplate any coverage for pandemics. There's no legal precedent, so we can't say what's the landscape is going to look like in 6 months or a year. But my opinion is no one's paying for it. They shouldn't be getting claims paid. However, something comes in, we're submitting it to the claims departments. Everybody should be following all the guidance that's coming out from the CDC, the WHO, the governor's executive orders, all the precautions that seem, prudent, whether it's PPE or distancing, working remotely, all that kind of stuff. Negligence is a tough one because it can be subject to interpretation. One of my roles is an employer, and some people might say you're not doing enough to keep us safe. And I may say, yes, we are. Who knows who's right? Again, I don't know what, there's no precedent. There's legislation in some states already trying to say that businesses are not going to be liable if they are alleged to have contributed to somebody contracting COVID-19. I don't know what's going to happen there. It hasn't happened in Maryland. We don't know if there's going to be anything federal. We don't know what's going to happen at the state level. So with COVID-19, some organizations will say, you don't have to come into the office. You can choose to come into the office. Some will say, you were responsible for maintaining the cleanliness of your work area. We can't control the doorknobs to the restrooms because everybody that's coming out should have a paper towel or something like that. So some organizations will have people sign waivers, whether it's employees or clients, saying that they realize there is risk in interacting with the office, with your case managers or whatever. So there's all sorts of things that you might do that might put you in a better position to defend if something happens. But COVID-19 is after 9/11, the federal government came out with terrorism coverage. I don't know that we've had a claim against it, but will they come out with pandemic insurance at the federal level and start charging people? I don't know. If they do, is it going to cover COVID-19? My opinion is no, because COVID-19 is here. It exists. We don't know if it's going to end or when it's going to end. It would be like somebody calling saying, I need fire insurance on my building. And I say, why do you need fire insurance? Because my building is on fire. Well, I can't insure a burning building. COVID-19 is a fire. So I don't think there's any coverage. But who knows? It's written in pencil, and people keep trying to push change, and it's understandable because many businesses are impacted significantly financially by this, and it's a real shame for what's happening in the economy.
So we put in the chat box, OSHA has issued guidance on returning to work. And so there are guidelines for businesses on reopening, if anybody would find that helpful. And I think Rob's suggestion on, adhering to the policies and guidance in your respective state or region or county is probably your safest bet in terms of anyone saying you might be negligent in opening too soon or not opening whatever. This, of course, no one has answers to at this moment. So adhering to the guidance that's out there is the best guidance anybody can offer at this time. So, okay, Rob. Now, you had mentioned cyber security.
Yes. I guess we don't have a slide on that. Okay, so there are people working day and night trying to trick you into opening something that is going to allow them access to your system. It's happening quite frequently. 2019 was the worst year ever. We expect 2020 to be worse than 2019, compounded by the fact that the hackers doing this are getting more aggressive. They're having more success, and there's more remote access by people who are no longer going into the office like they did 6 months ago. A year ago, a lot of times these people would get your system, they lock it up, and they'd want $5,000. You paid them $5,000, and they released your system. These days, they're getting much more aggressive in terms of the amount of money that they're looking for. And if you fail to pay, some of these hackers are posting information saying that they successfully hacked into your system, and some are actually posting information that they've obtained. So they're getting much more aggressive. One of the reasons that we believe strongly in cyber liability is because, one, it's happening. Two, if it happens, what do you do? Who's your first call? If you've got insurance, you call the insurance company. Then what they do is they give you a coach. They give you a cyber coach. And this coach says, you have to report that you were hacked to all of the people potentially impacted and follow the rules in every state in which you have people who potentially are impacted, and you have no idea where to start. So it pays for the notification. It pays for the folks that are trying to determine how the hack occurred. It can provide coverage for, restoration of your name, with the public, because if our system got hacked and thousands of our clients found out about it, how comfortable would they be continuing to provide their name, address, driver's license number, social security number, et cetera, to us to be retained in our system? They didn't have some assurance that, one, we have very, very serious protection in place. We have identified how they got into the system. We have changed our protocols, and we're giving you identity theft protection, and we're giving you credit protection for 5 years or whatever it is. So all of these things cost money, and a good cyber liability policy is going to do a lot of this stuff for you. You'll see some policies, there's an endorsement on there for cyber liability or data breach, and it's $95. That's not a robust cyber liability policy, unfortunately. It's probably a low limit. It might be $20,000. It might be $50,000. A good policy is going to be at least $250,000. It's probably going to have about 10 coverage parts. It's probably going to sound totally Greek to you because you're going to be reading this and saying, what's social engineering? I don't know what that is. Well, that's when an email comes in from the executive director instructing you to do something, but it didn't come from the executive director. It looks like it did. They tricked you. You wired money here. You did this. You sent a check to somebody. So there are things like that. And it's funny. I talk to clients, and they're like, oh, yeah, that happened to me. Fortunately, I walked over and talked to my executive director. She said, I didn't send you anything. So there are smart people that are very, very committed to tricking people. And it's for two reasons. One, it's for money, and two, these people want bragging rights. They like to brag to their fellow hackers about their success. It's kind of like the guys who get away with drug dealing, and then they walk down the street, and people are looking at them like, man, that guy's a dude. He got arrested, but he's walking the street 2 days later. So some of these criminals, it's not just about the money. It's about bragging rights.
So when you talk about cybersecurity breaches, I read where half of the system glitches are human error, like employees using cell phones or their laptops get dropped or something like that. That would also be covered by the cybersecurity policy. And
50% is probably low. I'm going to say it's probably a lot higher than 50%, but human error. Somebody clicks on something they shouldn't. Let me tell you about something that we started doing some time ago. Our IT company said, there's this company that sells a product that will send emails to your staff trying to trick them into opening. And if somebody clicks on something that they shouldn't have, then they get the big red sad face, and it says, you should not have done that. You have just earned the right to take this training. So we have this company that is doing this, and it's to help you scrutinize when you should not have opened a certain email, and hopefully it will be that one and not a real one. But there are companies that are providing that service, and it's not very expensive.
Mm.
Now, you don't want to tell your staff you're doing that.
I see. Okay. So talk to us about how much coverage is enough. And I'm sure that's not an easy answer.
Oh, it's a really easy answer. As much as you need.
Okay.
At the time. So no, there's no way to know. Your comment about $30,000 on an average size claim, that I agree with. A D&O, I've seen six-figure claims, not many, but have I seen a $250,000 claim? No. What do you have to do to have a claim that's going to be $1 million? I don't know. I mean, probably have a really bad automobile accident. You do a lot of injury or kill a bunch of people or something like that, and that may get you up into $500,000, and I don't know. But so there are some immunity laws. There's one in Maryland that's really nice. It says if you have the right coverage and the right deductible, you have immunity. But I don't see anybody saying you only need $750,000 because we think Maryland charitable immunity law is airtight. I'm not going to tell anybody that. First of all, it only covers things at the state level and not the federal level. And there's a lot of stuff that would be brought at the federal level. There's not another immunity law that's like that at the federal level that I've ever heard of. So some things, people will say, well, we're a small organization. Do we need, that much coverage? Maybe you don't. What do you do? What services do you provide? And how big are you? And I say to people, before you ask about insurance, you should think about risk management. So the COVID-19 situation is a perfect example of an opportunity to manage your risk. Insurance is only one way to deal with risk management. But talk to the people who know the most about your organization. Maybe it's your board, maybe it's your staff. What would happen that could make it a really bad day? And have people just have a little bit of fun. Get creative. Make a list of 5 things, 10 things. Then, can we get insurance? Is it available? Is it affordable? If we can't get insurance, then what do we do? Should we have policies? Should we have procedures? Should we have waivers? Should we not do this? Should we change the way we do it? Should we outsource it? So, insurance is one component of risk management, but you still should be thinking about all of those other issues, because even if you have insurance, you want fewer claims, because if you have enough claims, you're going to get canceled. So you want fewer claims and you want smaller claims. So you should be doing what's reasonable in order to attempt to reduce the likelihood of claims, because you can't eliminate. Some contracts require certain amounts. If you ever have insurance requirements, I think you send them to your broker, not try to interpret them and tell the broker what you need. We've seen situations where we picked something up when maybe somebody else didn't. We saw situations in this state because there was one grant-making organization that was funding a lot of our clients. So after about 5 of them, we basically said what they're asking you to provide in terms of employee dishonesty is ridiculous. They're giving you a $25,000 loan or grant. They're asking you for $1 million. So we asked all of our clients that we knew were dealing with this organization to push back and tell them that we think what they're asking is ridiculous. And what they did is they changed their requirement and reduced it based upon the funding level that they were providing each of these organizations. So that meant people don't have to pay for $1 million worth of coverage. They can pay for $250,000 or $100,000 or $50,000. So, that's why I think it's good to give it to somebody who probably knows more about insurance than you might.
Mm-hmm. I think that's a brilliant suggestion. That really looking at your risk before you jump into what you need, and having that discussion with your broker. I'd like to ask people who are on the call to put in the chat box if your organization has ever been involved in a situation where an insurance claim was made, a lawsuit or an accident, something like that. Would you just let us know if your organization has in any way been involved in making a claim for anything through your insurance policy? Let's see if anybody on the call has.
Do you want me to address? Do you want me to address something in the chat box?
Yeah, go ahead.
Okay. So if you contracted COVID at the office, you cannot open a workers' compensation case. That is incorrect. You can always submit a claim alleging that you incurred an injury or illness in the course of your employment, and that should be submitted to the claim department, and they should review the specific circumstances in your case and make a determination based upon that. That's what should happen with any case that is submitted, whether it's COVID-related or related in any other way. They're going to look at the individual merits of the specific claim and make a determination at that point in time if there's coverage. Our insurance association has told us not to report all claims to the insurance companies, whether we think there's any coverage or not. We did this last week. I had a lady who had an allegation filed against her for burglary. She is a case manager and was going out to see a woman who had requested services from them. She has a problem with alcohol, and the lady was coming to check on her. She knocked on the door. Son answered the door. The mother didn't hear her. She entered the apartment allegedly. She said she was never there that day, and it's the case says that there was burglary. I thought, there's no way there's any insurance coverage for this. We sent it in the insurance company. This company has a broadening form. It provides up to $25,000 in defense cost for an allegation of something against somebody in the course of their employment. Doesn't mean that they're going to settle, but all of a sudden they've got a lawyer that's being paid for, which is amazing, you know, and shocked me, 37 years in the business. So I thought, well, it just reinforced, we don't make claim determinations, we send them in. So somebody asked about events involving children. So if you're doing anything with a vulnerable population, whether it's children, elderly, developmentally disabled, etc., in addition to general liability and professional liability, you may need to have abuse and molestation coverage. So in a broad general liability package, and oftentimes we are trying to quote these four components: general liability, professional liability, abuse and molestation, and hired and non-owned auto. So a typical case for us is we quote those four types in the general liability package. Then we quote directors and officers liability and employment practices liability. Then if they have employees, we quote work comp. If they have property, we quote property. If they have auto, obviously. If they want cyber, employee dishonesty. And what we didn't talk about is volunteer accident. So you're an organization that does stream cleanups or something like that, or your Habitat for the Humanity. You're involved in something where your volunteers are more likely to get hurt than an office environment. The only way to get coverage for the injuries sustained by your volunteers is volunteer accident coverage. And the limits aren't super high. It might be 25,000, 50, 100. But if you've got a group of volunteers that you really care about and want to try to provide coverage in the event that something happens while they're helping you, it's something, our policy starts at $300 per year, and it's something else to think about.
Would there be any guideline around how much an organization pays for insurance in proportion to their budget?
I don't think that there's a correlation, no.
Okay.
It's really going to depend because, for example, let's say you happen to be an organization that has a large budget, but it's pass through. So while you might have a $10 million budget, you might have 5 or 10 employees. You know, you could have 50 employees and have a $5 million budget. So it's going to depend kind of on the types of services that are provided and the scope of services, the magnitude of services. So it's really going to vary. And, you know, some organizations, I mean, a perfect example. So I deal with a core service agency. Until August the 17th, they have people that work in an office. It looks like me, computer, desk, lamp, phone, you know, fax machine or scanner, whatever. Well, guess what? As of August 17, they're taking over a hotline. They anticipate 5,000 calls a year and 500 personal visits. So they're going to be sending out teams of case managers to assist law enforcement, to assist in domestic situations. So all of a sudden, they're going to go from an exposure of an office exposure to hiring 25 more people and doing something significantly different. The nice thing is they were smart enough to call me and say, we need to talk because what we're doing is changing. And that's very important because when you buy insurance coverage and you fill out an application and send it into the insurance company thinks this is what you do. This is all you do. If you do more than that, they don't have to cover it. They can deny coverage, saying there was a material change in the exposure. You misrepresented. You know, this was fraud. But usually they just say there was a material change in the exposure we were not made aware of. We didn't have the opportunity to consider whether or not we would cover that and if we needed to charge an additional premium. So when things change, either because you just grow in terms of your budget or the scope of services change, it's very important to let your broker know because you don't want to ever hear, what do you mean we're not covered? I thought you told me we were okay. And I say, I didn't even know you did that. You never told me. So it's very important. Communication is far better than a lack of communication.
Okay.
Jane, there was another question that came in. It asked, can Rob talk about an agency having a contracted individual going into schools providing adolescent pregnancy prevention? So what kind is the best insurance to cover an employee that is going into a school building to deliver a service, but is employed by the nonprofit?
It looks like it's contractor, not employee. So.
We got to be very careful about employee versus independent contractors.
Right.
That's another conversation, but an employee gets a W-2. Employees are very crystal clear. Some people are classified as independent contractors for various reasons. One could be because they truly are. One reason could be because the organization doesn't want to withhold taxes, have to cover them by workers' compensation, incur these other expenses. So they want them to be an independent contractor, and both parties say, fine, I'm okay with that. But if you ever look at the guidelines that the IRS uses, it would probably cause a number of people to be uncomfortable because if you really wanted to be an independent contractor, you should really work hard to make that person look and sound and smell like an independent contractor. So independent contractors are not supposed to be covered under your policy, period. They are supposed to be independent and independently insured. Well, how many people have heard of independent contractors that don't have any insurance? It happens all the time. So most people hope that they're covered or assume that they're covered, both of which are wrong. You should know if you're dealing with them if they're covered, and if they're not, they should be told that they are not. They have no coverage whatsoever. The issue about somebody going into a school, as long as you don't have the designated premises exclusion, where the services are being delivered shouldn't affect coverage, whether they are coming to your site or you are going to their site. If the policy is written properly, there should be no problem either way with that situation.
Okay. Can you talk about abuse and molestation policy?
So it's not possible to give a ballpark figure on the cost. Have we seen them less than $1,000? Yes. Have we seen them more than $1,000? Yes. It's going to be like a lot of the rest of this stuff. How many people do you have on staff or volunteers that are interacting with how many others? How frequently? You know, are you seeing these people every week? You've seen them once a month, you've seen them once a year, you've seen them once. Are you seeing people in a setting where it's like an AA meeting? So you've got 10 people coming together in a church basement with 2 moderators. Or is this big brother, big sisters, you know, where you've got a one-on-one with an adult and a child? Well, I think you can see where I'm going with this. If you're talking about a group setting with multiple moderators, the likelihood of a valid abuse and molestation claim is significantly less than somebody who may be a man meeting with a boy, you know, and takes him to a ball game, takes him out to dinner, you know, maybe takes him home, you know, because he's got Netflix and they're watching a movie. So it depends upon the exposure, the interaction, the amount of activity, and then they're going to ask questions. Do you do background checks on these people, on your employees, your volunteers, your independent contractors? You know, if so, if not, I don't know. Are they going to give you the coverage? They may or may not. If you do everything that the company thinks is prudent, you might get $1 million of coverage. If not, you might get $100,000 worth of coverage, or you might get nothing. So it's going to depend. You have to complete an application and submit it to get a quote. It doesn't obligate anything, but that's the only way to know for sure.
And Rob, the broker would submit that application to multiple companies to see what they would or wouldn't
Usually.
do? Yeah.
Usually. So, I mean, we know what our insurance company minimum premiums are. So if I get it from company A at the minimum premium of $735 for the 4 coverage parts I want, I don't care about going anywhere else because no one's going to be cheaper. No one else is the $735 minimum premium. You know, if it comes in at $1,700, and I don't think it should be, well, of course, it's probably going to 5 companies because at the end of the process, I want to be done. I want to know that this is the right coverage they should have. This is the best price I can find.
Okay.
They should buy it. Or that's fine, but I'm done because I believe that this is a very good value for the coverage which they need. So yeah, I mean, they're tied. I've got an assistant right now who's working on a number of cases. It's out to 5 or 6 companies. It was a group of League of Women Voters in one of the states, into multiple organizations, and unfortunately, that's a tough business, believe it or not. And so he sent them the responses from the marketing spreadsheet, probably from 9 companies, and their responses. Yeah.
Wow. Okay. We have another question about a home visitation parent education program where employees this time are going into the home, and that would be what, professional liability, would you say?
Well, you probably need the general liability in case they hurt the person or break their property, do property damage. Professional liability, yes, because more than likely with the services that they're providing, there probably is an exposure for professional liability. They're going into the place. Do they feel that there's a concern about abuse and molestation? Maybe. You know, I think so. And you know, they're trying to get there. So non-owned auto liability. So we're back to the package coverage. I mean, we work with a bunch of villages, which you might understand, helping people age in place. So these are seniors, and we recommend all of that because you're going in and dealing with an 80-year-old lady who's trying to stay in her house and needs help and is very frail, and could be a victim of some awful person. So.
So good point that one policy does not necessarily answer the question. It's really looking at a whole package of policies to ensure that you're covered for any eventuality. Right. Okay, we're getting a number.
Those that can be contemplated by insurance.
Yeah. Okay. Another question about virtual volunteer child meetups. I guess they're playing games online and things like that. Is that something that insurance would cover, needs to cover? Since so many things are happening online nowadays, is that considered a risk even?
So, I mean, sometimes it's not fun talking about stuff like this, but let's say that the volunteer or the employee is working with a child virtually, which happens all the time on the telephone. So somebody calls a hotline because they're thinking about committing suicide, or they've been the victim of an abusive relationship or rape or something like that. So whether it's by computer or telephone, there's the potential for an allegation that based upon the interaction with your person, this person killed herself, did something, went to where you told them to go and something bad happened there. So the referral to another place resulted in some type of a tragedy. So yeah, you might need professional liability for that, whether it's face-to-face or virtual.
Okay. Good point. All right. Boy, oh boy, we have covered so much ground in this conversation. If you could move to the next slide, Rob, I think that's all about questions. I think you're in control still. Yeah. So I think we can move to the next one. Whoops, go back. Okay. So there are resources here. One was put out. There we go. One is the Nonprofit Insurance Guide to Risk Management and Insurance. This was put out by the Public Counsel Organization in California in conjunction with the District of Columbia Bar Association. It's quite comprehensive. It's quite good, and something that I think would be a very good source of background for this entire discussion today, something that could be very useful to share with board members, with finance committee members as you're discussing what kind of coverage is needed, executive directors, CEOs, office operations people also would find it very informative. I mentioned the OSHA guide on returning to work, and there's also an article about should nonprofit directors worry about personal liability. It's a short article, and I want to turn back to Rob because he and I had a discussion about this, given about personal liability under D&O insurance. And Rob, I should have asked you this earlier, but it's an important question, and your response was very important about personal liability for board members.
Okay, so yeah, if you have a decent directors and officers liability policy, it's going to cover the directors for what is covered under the policy. So there's two important things about directors' officers' liability. The first is who is covered, and it usually is something like directors, officers, employees, staff, volunteers, and committee members. People hear that and they get really excited because they're like, oh great, everybody's covered. I said, we're not done. Now what is it? What does it cover? So you got to read the second part. But then the director says, well, am I covered? And I'm like, sure, you're covered for what the policy covers. So if I get sued personally, I'm going to be okay, right? And I'm going to say, if it's something that's covered by the policy and you're named and you are a director, of course you are. So you're going to have the defense and the settlement that is supported under that policy. Some people say, do we need to have the policy? And I kind of touched on this. Yes, you do, because there's not immunity that's good enough. If there's some brought at the state level, there's no charitable immunity for an individual. It's only for an organization. At the federal level, there's only immunity for an individual, not for an organization. So you can see it's not airtight. It's not good. But an individual director, yes, you should have insurance, and it should cover you. So again, if it's subject to that. The other thing that Jane and I talked about is for what's supposed to be covered. So you misappropriate funds, you pay yourself, you use the funds for something that's not consistent with what's supposed to be happening. You benefit financially by your position on the board. So you do other criminal types of activity. Absolutely no coverage for you. If you do that and the organization gets sued, there may be several liabilities. So it may provide coverage for the innocent board members and the organization. So, the criminal, you're on your own, but the innocent people, may be okay. Mm-hmm. Hopefully it isn't proven that you condoned and knew about and allowed that activity to continue, because that might make it a bad day for a bunch of people. But yeah, if you're playing by the rules and everything's okay, your coverage should be there for you.
Mm-hmm. But wrongful acts of an individual board member, say a treasurer who had a means to access money for their personal use to pay their college tuition for their child, would not be covered under a D&O policy. They are on their own because it's outside of the organizational coverage.
Right. If it is somebody who is covered by an employee dishonesty policy, and that individual misappropriates funds, and the organization presses charges, and that person is found guilty, then they may have a valid claim to recover the money from the insurance company for, the misappropriated funds. So it's possible the organization may be made whole, but you have to take all those steps. You can't just say, well, we like Susie, she did a good job. Yep, she got in trouble with drugs, so she needed money for this, but we don't want to make her life any worse. She's got enough trouble. Well, that doesn't trigger coverage under your policy. You got to press charges.
Yeah. Okay.
And the other thing about employee dishonesty, and you got to be really careful. Many policies say if there's a crime committed, a dishonesty claim that is alleged to have been caused by somebody with a prior history of this type of a crime, there's coverage under the policy. So if they've done it once, most policies are not going to cover them if they do it again.
I am astounded. I kind of track these things just for my own information as I do trainings and things. And it's astounding to me how many situations where a volunteer, an employee, a board member can somehow embezzle money from the organization. Just astounds me. So always something to be mindful of as you look at your risk management.
Jane, I've seen a couple of claims that have been over $100,000, and they were for-profit organizations, but the pattern is long-time trusted employee with not a good system of checks and balances.
Good point. Yeah. Well, perfect segue. If you could go to our next slide. This is Rob's contact information. We cannot thank him enough for this truly informative overview of insurance. I know there's so many more questions people would like to ask, and here's Rob's contact information. And we would also guide you to the nonprofit association in your state to connect with a broker such as Rob, who specializes in nonprofit organizations.
And Jane, just one other point. While we operate primarily in Maryland, we're licensed in quite a few states, many more than most people would think. So we're licensed in more than half the states. So we've had programs in other states with other state associations. So there is the possibility that we could potentially work with some groups even if they're not here.
Okay, great. All right. So our next webinar and last webinar really fits perfectly with where we were a minute ago talking about trusted long-term employees that might be embezzling funds. So our next and last webinar is on Thursday, July 23rd, and it is on setting up internal controls for small nonprofits. Perennial issue with nonprofits is segregation of duties. When you've got 3 people, 4 people in an office, and who's writing the checks, who's signing the checks, who's depositing the checks, all that. So we have CPAs coming to talk about setting up those internal controls. Very important issue for small nonprofits. So join us. The information on registration will be coming out. So next slide, we have a couple of other webinars coming up on the National Early Childhood Family Network and FREDLA is a co-sponsor, and that webinar is on Help Me Grow, a model system that utilizes and builds on resources in order to develop and enhance a comprehensive approach to early childhood system building in any community. FREDLA is also hosting our July learning community on July 30th called Real Talk in Real Time, creating an instrument to measure parent support effectiveness. The System of Care in Kansas, called Kansas Together, created a specific instrument that could be used via mobile phones to directly evaluate after receiving services. We have a lot going on that encompasses a broad range of topics, from insurance to early childhood to measuring parent support effectiveness. Our thanks again to Rob and to Sarah at the TA Network for hosting this very rich discussion today. We're grateful to both of you. And our last slide, Rob, is our thanks to all of you for sharing part of your day with us, whether your summer includes time at the beach, at the pool, camping or hiking in the mountains, or perhaps a staycation at home. We hope you and your family stay well. Thank you again for spending time with us today, and we look forward to crossing paths with you again in the future. Thank you. Bye-bye.